Hi, and welcome to the San Diego real estate market stats for or through September of 2019. I am Maggie Clemens with One World Realty, and let's just get into it. So as usual, let me get this out of the way here. This is, we are going over the the monthly indicators report through September of 2019. This report is put out every single month by the Greater San Diego Real Estate Association. It is a PDF. If you would like for me to send it to you, just shoot me off an email and I'm happy to send that to you. And I do put it on my website every month. So let's take a quick look and go through here. So just the write-up here, it says that as the weather is cooling, the housing market begins its annual cool down. So annual cool down, that means that every year at this time of year, it starts to cool down. And I'll show you some of those graphs here in a minute. The market fundamentals suggest no significant changes to the recent trends, meaning that, they don't see it going way up and they also don't see it way down. But we are, as I've been saying, probably going to be bumping along this line for a while. So in San Diego, closed sales increased, pending sales increased, inventory decreased. The median home price did go down, days on market went up, and the supply decreased. So let's just take a look at everything that's going on. How do I get this thing out of the way? So this is for the detached market, single family homes. It does not include mobile homes. It does not include condos or townhomes. So for San Diego County, the entire county, new listings. So what I like about this is that it does show us the historical graph from September of 2017, so we can see what's happened over the last 2 years instead of just 1 year. This column here marks from the month of September 2018 to the month of September 2019. So just comparing the actual month, where this column over here compares year to date, and you'll see some of those differences. So new listings for single family homes have gone down for the month, and they have gone down for the year. And we can see here that you can just see from this is, let's see, March, April, May, June, July, we've started slowing down. But as I said in the previous page, the annual cool down, we expect this every year, and you'll see that in the graph that's coming up. Pending sales went way up for the month, so from September to September, you can see it's significantly higher, and it's a little bit higher year to date. So from January of 2018 to September of 2018, compared to January to September of 2019, it is up about 3.5%. That's not a lot. Closing sales will typically follow pending sales, and we see that that is up and it is down year to date. Median sales price from September of 2018 to September of 2019, it has gone down, and it's just barely gone up a little bit, 1.4% year to date from last year. The average sales price has gone down September to September, and it is just barely gone up again year to date on both. So we are, as I mentioned, we're going to be treading this ground here for a while. Volume of sales has gone up from September to September, but it is slightly down for the year to date. Percentage of original price received is about the same. It's a little bit down, but it hasn't gone down drastically. Days on market has gone up. All right, so we had a little bit, it went way down when we had a lot of inventory. It's amazing what just a little bit of change in the mortgage rates will do. And then it went back, it just kind of went back up and slowed just a little bit by a day. Housing affordability has gone up from September to September 14% and year-to-date 12%. And this is critical. This is our Achilles heel in San Diego County, and I'll show you on a later graph how that comes out to play. Inventory of homes is way down, and you can see it was way up here, and then it kind of gone down here. Look at where it was in December of 2017. It's amazing to watch this market. Months of inventory have gone way down. That is down 25.8%. So let's take a look at the attached markets. Attached is condos and townhomes. This has, again, it's gone down from September to September and is just below breaking even on the year to date. So we are seeing some influences here. Pending sales has gone up from September to September and just barely down. So we're starting to see things stop a little bit. Closed sales is up month to month, and for the whole year, we've actually closed 6% less in 2019 than we did in 2018. And if you'll remember last year in 2018, we were really thinking that we were right on the edge of probably dropping down into a recession, but then the interest rates changed, the mortgage rates changed, and then we saw an influx. It's amazing how when they add a little bit of fuel to the fire, what it does. Average medium sales price is down month to month, but it is up just 1.2% for the year. Average sales, same, and it's just about break even year to date. So we're treading water here. Closed sales, the volume is up 3.2, but even though the sales price has gone up a little bit, we are down 6.2% year to date. Percentage of original price received, we're at about 97.8. We're in 97.8, so we're treading ground again. Days on market have gone up slightly, 1 day, and that shows up at 3.7% from month to month. And look at this, from 24 year to date last year to 31 year to date this year. So we are starting to see homes sit on the market a little bit longer. Housing affordability has gone up again from September to September, and then also 11.8% from year-to-date figures. Inventory of homes is down. Again, part of that is our annual cool down, but we'll take a look at that. And then the month supply of inventory is down slightly from 2.5 to 2.3. So let's take a look at the graphs here. This is just new listings here. Let me see if I can put this where it's not going to be in the way here. No, I don't think that's going to do it. So new listings. What I like about this is it shows us 2017, 18, and 19. So we can see the trend over a period of time rather than just 1 month to 1 month. So this is September 2017. It went up September of 2018 and then down again, even below 2017 numbers for September of 2019. And we see real close to the same thing happening in the attached markets. Year to date, we are slightly higher than where we were in 2017, but lower than where we were in 2018, and the same for attached homes. And you can see over here, this is a rolling 12 months. It's single family homes are down 1.5%, and attached homes are actually up a little bit here. But if you look at September to September, it's low. So let's take a look at this graph here. And we can see this goes back all the way to May of 2012. And we can see that every year about this time, it's the new listings, the number of homes coming on the market drops significantly in single family and in attached. And as we go through the year, it builds up and then it drops significantly, builds up, drops significantly. And that is what we're seeing here. The difference of what we're seeing is that the lows are lower and the highs are higher. And a lot of that has to do with the external influences on the market. So you cannot predict real estate. It is not possible. There's just too many extenuating circumstances, but we can look back on the trend. And if we look at this chart, we can say, oh, new listings are down, but that is typical this time of year. So we don't have to panic about that. Pending sales, again, September 2017, 18, and 19, we can see that it went way down last year, and then it's gone way up this year from even 2017. And it's slightly down from 2017, but way up from 2018 on attached. Year to date, we see that we're down slightly, a little bit above 2018, but down from 2017, and we're down on attached. Over here, September on detached was up 21%, and on attached it was up 7.4%, but we can see that rolling 12-month average is actually just barely breaking even on detached, and it is a minus on the attached. And as we go here, again, historical pending sales, this goes all the way back to May of 2012, we can see the trend. All right, and we see, you know, we got some stuff going on here, but I really feel that that's the influence of the Fed and what they're doing with the mortgage rates here. Closed sales will closely mirror pending sales because we can't go to closed without pending. So typically we see these mirror, and you'll see that here with a little fluctuation. Medium home price from September of 2017, it's actually up significantly, but it is down slightly in from year to year. And we're seeing the same thing on the attached. So, and then year to date, it's gone up. So we're seeing the median home price is still increasing. We might have, you know, a little anomaly month to month, but year to date, we are still seeing an increase. On the 12-month average for detached, it's up 1.7%, and it is up 1.5% for attached. And we can see on this chart that from May of 2012, it has slowly just been ticking up. It came down a little bit. We thought we were heading into the recession. We get a boost from the Fed, and it comes up a little bit, and now we're going into our annual slowdown. Average sales price reflects almost the same as what the median home prices are, just a little different. The 12-month average on detached is up 2.3%, and for attached, it's almost break even at 0.5. And we can see that chart has a little bit more fluctuation, and that's just due to the calculations here. Dollar volumes. Even though home prices have continued to increase, not as much as they were, but they are still increasing, the dollar volume is actually down a little bit year to date. And that has to do with how many pending and closed that we have. And we can see here that it's not surprising, but again, we're seeing it coming down a little bit more and going up a little bit more. So the lows are lower, the highs are a little bit higher as we bounce along this bottom. Percent of original price received. And a lot of this has to do with the agent and how they counsel their clients. And some clients are just not counselable, let's put it that. But we are seeing, you know, it's about 97.6 in 2017, the same in 18, and it's dropped just a little bit. So the homes are being priced properly. We got a little bit of a drop in the attached market here. Rolling 12-month average shows a minus 0.4% for detached and a minus 0.7% for attached. And we see here, looking at this, this is when the market was starting to come back, and then we're bumping along the bottom here. But again, that low's a little lower, highs are a little higher. Days on market, we're seeing quite a bit of difference here. And that is for the month of September in 2017, it was 30, 2018, 31, and then 2019, 32. So we are seeing a little bit of an increase, but it's not a whole lot. You know, they used to define a normal market as having a 6-month supply of inventory. And, you know, that meant it took longer for homes to sell. So we're sitting at right at a month. That's not totally drastic. And we see that those numbers have come up a little bit, gone down a little bit, come up a little bit. Housing Affordability Index. This is, again, our Achilles heel in San Diego because home prices are so high. So what does this number mean? So the higher that number is, the worse it is. So let me see if I can explain this in one foot. So on detached homes, it says that the affordability is 56%. So what that means is that the median household income in San Diego can qualify, their income can qualify for 56% of a medium home priced home of a medium home price in with all right, I'm messing this up again, so let's just fill in the numbers. 56 means the median household income is 56% of what is necessary to qualify for the medium home price home under prevailing interest rates. So that means the median home price income can only afford would only qualify for 56% of a median home price. So the higher that number goes, that means that it's not good. And the same here on detached, so 85%. So this is the reason why most first-time home buyers will buy a condo or a townhome, because they can afford it more readily than they can a single-family home. I hope I haven't just botched that whole thing up. I'll do another thing on it. 12-month average is minus 0.5, but check this out. September, it went up 14.3% for a single-family home and 16% for a attached home. So at some point, we're going to see this bouncing along the bottom and maybe drop just a little bit. Or guess what else could happen? Employers could start to pay their employees a livable wage. That would be nice, but not very practical, especially here in San Diego. All right, so we are seeing that the affordability did come down a little bit, and then it came up. It came down a little bit as interest rates went down, then it's starting to come back up again. Inventory of homes. So way back in the day, we used to have a normal market, whatever that is anymore. It used to mean that we had about 16,000 homes on the market for all of San Diego County. We have a lot of people in San Diego County, so 16,000 homes is pretty average. But we are sitting at, right now for the month of September, we are sitting at 4,208 single-family homes, 2,096 attached homes. So with all of the people we have living in this county, to be fighting over 4,200 single-family homes or 2,000 attached homes, this is what is driving up the home prices. And we can see that in this chart. So it's like goes down this time of year, comes up, goes down, comes up. So everything is going about the same. Here's our inventory of homes, the month supply of homes. So what this means, we have 2.3 for single family homes and 2.3 for attached homes. And what that means is that if not another home came on the market, then we would sell out of single family homes in 2.3 months. If not another attached a townhouse or a condo came on the market, we would totally be sold out of inventory in 2.3 months. Typically, the industry, we used to say that an average market or a normal market was 6 months supply. So we are significantly below that, plus the low interest rates, and that's why we're still seeing home prices start to creep up a little bit. But because of the affordability index, we're starting to see, that treading of the water here. And again, we can see that chart where it came way down, came up a little bit, and then this is when we thought we were going to go into the recession, and then the Fed boosted it up a little bit, and then we're starting to see the mortgage rates go up a little. Total market overview, this basically just goes over everything that I just went over with. It just combines both the single family and the attached market there. So that is our San Diego real estate market update through September of 2019. Again, my name is Maggie Clemens with One World Realty. If there's anything I can do to help you, or if you'd just like for me to send this out to you, please give me a call, send me a text, and I'm happy to do so. In the meantime, have a great day, have a great month, and I will see you next month.